Thank you, everybody, for joining us today. We're just waiting for the gentleman to turn the mic on, and then we are going to start. Thank you. So we'll just give it a test, guys, if you don't mind.
Test, test, 1, 2, 3.
Very good.
Perfect.
It's working.
So if everyone can hear us okay, if not, just wave. My name is Janet Sheriff. I am the CEO of Verdera Uranium. We just announced yesterday an RTO of a TSX-listed company and a concurrent financing. So I'll give you a little bit of my background, and I'm going to ask Bill Sheriff and Greg Huffman to introduce themselves. I have been in the mining industry for far too long. Worked up in the Yukon, ran a gold company. Actually produced gold, produced coins, and then was lured into uranium through my husband, full disclosure, is Bill Sheriff. I have worked with enCore Energy, handling all their communications for a number of years. I was the first CEO of enCore when it was Tigris Uranium, before it was merged or changed into enCore, and Dr. Stover took over operations. Today, we're just going to have a conversation about the nuclear industry, about uranium, and about the companies and how they all fit together. So I'm going to start by introducing my colleague, Greg Huffman. Greg, if you want to introduce yourself.
For sure. Good morning, everybody. My name is Greg Huffman. I'm on the board of directors of Premier American Uranium. And I'm also an advisor to Verdera Energy. I'm a geologist by background, but I've spent the last 20 plus years on the capital market side of the mining business, predominantly working for a number of different brokerage firms, most recently Canaccord Genuity as the global head of mining sales for approximately 8 years. And Bill and I have known each other pretty much my entire career on the capital market side, and spent up until about 2 months ago as the CEO of Nuclear Fuels prior to its acquisition by Premier American Uranium.
Bill Sheriff. I've been in the uranium business since 1986. Procured the largest collection of databases historically, pertaining especially to the U.S., but worldwide. Beginning with Union Carbide's worldwide database. They were a major uranium player for most of the time prior to 3 Mile Island. And I won't name them all, but we've got Getty Oil's database, just picked that up a couple of years ago, and we've got W.R. Grace's Ranchers Exploration, probably a dozen different companies' databases. And it's the original data mining. You go through paper files and stinky, smelly paper files, but the data in there is phenomenal. And it's well worth digging through it. It's built a number of companies. Our first public company involving that was Energy Metals. I started with Paul Matisik, who's got a significant name in the business. He's gone on to a number of other successes. But we started that one on a shoestring budget in 2004. 30 months later, we sold out to Uranium One, an international company, for just shy of $2 billion. And then I stayed on their board for a short period of time. Within about a year and a half, we started becoming financially stressed because we were putting too many projects into production too quickly. And the Russians came to help, and I wasn't very comfortable with that terms of the financings. And so I left, took a number of the people with us, and we started enCore. Fortunately, we financed with a few $1 million because about 4 weeks later was Fukushima, which gave us a decade to contemplate our future, and or the decade of darkness, whichever you prefer. But in our instance, it worked out very well for us. And in 2019, we saw the tides changing again, and made a commitment, picked up 2 of the only 11 ISR projects in the U.S. Subsequently, we've added a 3rd one, so we've got 3 of the plants. 2 of them are operational. I think we're the only company in the U.S. with, and maybe North America, with 2 plants under the same flag, and not many of them in the world. So ISR is all we do at enCore, and look forward to saving a little bit of time at the end of this presentation for questions if you have any.
Thank you. And I want to get into how all the companies fit together. But I think first I'd like to say that Bill and Greg met in 2004 when uranium was pretty much out of favor. So I think it's an important step in the whole evolution of all the companies. Maybe Greg, just to explain why you were both interested in uranium at that time, and then also how is this cycle different than the last cycle?
Yeah, absolutely. Thanks, Janet. So, yeah, 2004, I had moved from Sudbury, where I was working as a geologist for Falconbridge at the time, to Toronto to accept a job as a mining analyst at a small boutique brokerage firm. Didn't know a lot about uranium at the time, but they told me the first day I showed up is that I'm going to learn a lot. So, delved into the uranium sector, trying to figure out, at that point there was Cameco, the Kazakhs, and then probably 3 or 4 junior companies who had aspirations to become uranium producers. One of those was a company called Energy Metals, or what would become Energy Metals Corp., and that was run by Bill at the time. Bill and I actually found each other at a nuclear conference, fuel buyers conference in early 2004, where I think we were the only 2 non-fuel buyers present because the sector was so out of favor at that point. Uranium price was, sub $8, and not a lot of investors. But Bill and I, both had the thought that the uranium price needed to go higher from those levels, and we're doing the work to try to figure out how we could find the best assets on Bill's side and then the best companies on my side to present to our investor base. And we got to know each other at that conference, and subsequently with the launch of Energy Metals, the firm I was with helped with a number of the early financing for Energy Metals, and became one of the most successful companies of that early 2004 through 2008, 2009 uranium boom. Probably one of the most exciting bull markets that I've ever seen. Price went from sub $8, as mentioned, to $139. And probably could have kept going had it not been for the global financial crisis. So there's a lot of similarities to what we're experiencing now. I think we're in the very early innings, except you need to add a factor of 10 to the price. I think we're really at sort of a baseline price, sitting here around the $70 to $80 mark in terms of spot. Terms a little bit higher. That's the real market that I'm sure we'll talk about. But we really think that to incentivize new production that we're going to sort of very much need, both domestically here in the U.S. and globally, uranium price needs to go materially higher this cycle than what we saw last cycle. I'll head over to Bill just for.
Yeah, just a little bit more historical context. The 04 to 08 rally in uranium was at a time when worldwide demand was shrinking on a yearly basis. It was quite out of favor, and it was simply an interruption of supply that scared the market and made it go up. And weather always changes, so it changed and went away, and then Fukushima shortly after that. Financial crisis, then Fukushima kind of finished it off. But, at the time, 4 of the top 5 producing mines in the world experienced either a series of floods, as in the case of Cigar Lake, which was to be the biggest one. It had 3 separate floods, 2 of them in a very short period of time, so you typically don't see the reference to 3. MacArthur River started it in 2003 with a flood. These are, 2 of the really colossal mines in the world. Rossing in Namibia was run by RTZ, and they said in 2005 that they had 2 more years of mine life and they'd be finished. Just to put something in your memory, world's largest mining company said to be finished in 2 years. It's still producing. So they were a little short-sighted on that one. But nonetheless, they scared the market. And then Ranger, ERA's mine in Australia, flooded due to monsoons. So you take those 4 and you really look at a force majeure situation, which was one of the major propellants there. Huge difference this time that I see is this is a demand-driven market. You scarcely go, especially in the U.S., a week without an announcement of a new reactor, some new technology, some economic incentive to build it out, an increase in the fuel chain, which we'll touch on a little bit. But we produce the yellow cake, and then it goes through enrichment. Actually goes into conversion first, then enrichment, then fabrication. All of those different pieces of the fuel cycle are controlled directly by the utilities so that they can adjust and trade off on different values in that fuel chain. But you read about everything except fuel, and also the grid lines that you're going to transport all this power in. Our grid in the U.S. is still woefully inadequate and vulnerable, and we're talking about needing 25, 35, up to 100% more electricity very quickly. So if there's 2 investment theses out there that are really compelling, one of them is actually people that build power lines, because we're going to need a heck of a lot of that done. The other one, which I'm going to obviously have a much more dear interest in, is the uranium fuel to power these reactors. And just to illustrate that, we obviously don't need a nuclear power to have a start at AI. We have it now. But in order for AI to be competitive with the rest of the world and to reach its full potential, whether you like it or not, it's coming. And the only way that will happen is with nuclear power. And the only way that will happen is with more uranium.
Thanks, Bill. Since you have the mic, we'll just keep going with you and then pass it off to Greg. But there's been a very big push from the previous administration, and even bigger with this current administration, that we are entering the U.S. nuclear renaissance. So can you speak about the types of support that we're seeing from the federal government in order to achieve this? And knowing that AI is going to require nuclear, but small modular reactors, there's also the Department of Defense and their demands for uranium as well, and it's always a domestic source.
Yeah, I think if you want to go back in history, the seminal event was when Microsoft announced $27 billion to start a reactor up. And that changed the world in terms of the nuclear industry. The next day, there was a banking consortium of 14 international banks assembled hastily that guaranteed the money to do this nuclear renaissance. And that's the kind of money the nuclear industry has never seen before. And since then, you've had virtually every other high-tech player come in and commit double-digit billions to the nuclear phase. So it's certainly an unquestionable phenomenon, something orders of magnitude more than we've ever seen come into it. I think that's the biggest. In terms of, where is it coming from? The biggest change we see in terms of daily activities are the Fed. The Fed has been led by the NRC and permitting activities woefully inadequate for decades. It has taken 15 or 20 years in some instances to get a relatively safe mine into production. And it's just been inadequate. Investors don't have the patience for 20 years. I dare say no one in this room makes 20-year investments in terms of trying to make money. So it certainly is difficult. There were two states that were very proactive during this time, Wyoming and Texas, which were both agreement states back in the 70s when the world was predicting 300 new reactors in the U.S. prior to 3 Mile Island, which is now about where we are again going forward with a 40-year hiatus in there. There was the NRC realized, which for the federal government was remarkable, they realized they wouldn't be able to keep up with all the applications. So they started an agreement program state, same federal rule book, but administered by the states and not by the federal government. And the two leading states in uranium were obviously Texas. They were the first agreement state, and then Wyoming has become an agreement state within the last 15 years. What it does is it means that you've got a pretty good certainty of permitting in both jurisdictions of under 3 years from when you start until you're in production. And we've, at enCore, all of our operations so far have been in Texas. We've had 4 major permits issued, 17 months, 20 months, 30 months, and 136. And I dare say that you can't get a sidewalk in most metropolitan areas permitted in 17 months, much less a nuclear facility. So it's been a real pleasure to be there. We have, our next big project comes in South Dakota, which we now have enough certainty to put a timeline on that will be in production. And that's made possible by the FAST-41 program of the current administration. And this is really a remarkable breakthrough. It's a government program, and they're doing exactly what they said they would do. It's not a one-way street, but what they do is they appoint a lead agency in the government to take your project and shepherd it through. Their minimum criteria is to get into it. Probably the most significant initial hurdle is you have to be able to prove your $200 million benefit to the economy and the value of the project going forward. But it's not just the government taking care of their end. There's an equal demand on the company. We have 3.5, 4 people that are working full-time to honor our side of the deal with FAST-41. They're requiring such things as almost a feasibility level study in order to keep going in the right direction. But what their job is, because we are NRC permitted, is to make sure all of the 3-letter acronym federal agencies work in concert to go the same direction and get you across a line in a much better timeline. And that's given us confidence now to where in South Dakota we're doing condemnation drilling starting in roughly January, February, depending on the winter, as well as we've hired an ECM for actual construction of the plant, design and construction. We had nowhere near that certainty 6 months ago. Point in case real quick, and I know we don't have an infinite amount of time here, but this really illustrates it because talk is cheap. About a month before we were accepted into FAST-41, one of the government agencies came to us and they had a study that they had to do to keep our license valid and keep us moving that needed to be done in 8 months. And they came to us and they said, well, we've experienced some delays. What would you think about if it was 16 months? And we said, well, we don't like that. What's our choice? And they said, oh, well, you don't get a choice. We're just letting you know. And that's the way it operated for years in these eternally extended deadlines. Within about a week of being in FAST-41, they called back and they said, we'll have it to you in 4 months. Words come down from the top. It will be done in 4 months. And that is real concrete proof, and it's a breath of fresh air because that project had been in permitting for 15 years. And it wasn't gaining a whole lot of speed. But it is now, and it's obviously a critical impact to the country's uranium needs. So it's changed a lot. And I think you're going to see further changes and accelerations. And a lot of the administration's moves have been done under the DPA, Defense Production Act, which it doesn't circumvent state law, but it takes precedent over state law in almost every instance. And it is a defense priority. Just so you know, all of the demand curves that are out there publicly available for uranium, be they from the World Nuclear Association, private sources, or from NEI, National Energy Institute, all of them do not take into consideration defense needs. And this is going to be a real shock. Most companies don't like talking about it. It's sort of the less attractive side of our business when our primary customers are the utilities. But we have stockpiles in the U.S. that are mandated to be 30-year supplies, 20-year supplies. There's a couple of them in particular. We're now down into the high single-digit number of years of supply in these, and this is for highly enriched uranium, which powers our submarines and our aircraft carriers and certain other vessels, as well as ordnances. We've promised New Zealand the AUKUS sub-program in Australia. We've just promised South Korea. By the time we do that, we're going to draw one of the stockpiles down into the mid to low years of supply. Also, of significance is the Air Force is replacing every ordnance in their arsenal with the S-61s. And this is public. You can go find it. It's not widely advertised. But here again, that's going to be a big reduction in the supply of HEU. And to top things off, the only place in the world, we used to be able to make plenty of HEU, but right now if you want to buy HEU, you've got 2.5 choices. We don't know really how much damage we did to Iran, so we'll count them as a half. The other 2 places that you can buy defense HEU are China and Russia. So what could possibly go wrong? So you're going to see even more money poured into this, and you can take a significant factor and add it onto the consumption curves that are being widely publicized. So what you see is, I won't say the tip of an iceberg, but it's an incomplete story in terms of the demand because it is coming.
Thanks. I'm going to ask Greg a bit of a different question, and then I want to get into how the companies all fit together in the production and the development and exploration profile. But one of the things that really changed, and we see it a lot in the youth, the younger investors, I always say people my son's age, but a lot of things that what really changed was the Ukraine situation and the awareness that we were fueling our energy grid from adversaries or countries that may not be necessarily our allies. So I wanted to speak a little bit about what that impact has had on the market and also get you to talk a little bit more about and how that ends up working into Wyoming.
Yeah, thanks, Janet. I think it's something that was really, a couple things changed, and we asked initially about what's different from the 03 to 08 cycle, and really, Bill mentioned that, this time it's really shifted from, supply side issues to demand driven, and, back in 08 or 03 to 08, we were talking just about the normal run rate consumption for the current reactor fleet with a few new reactors coming online in China over the next couple decades. There was no talk of new reactors really anywhere else in the world. What's changed now is not, first off, we're extending the lives of reactors. That's a big thing. So, these are fairly easy to model in terms of the consumption of uranium, the current reactor fleet. But they have a finite life, they're supposed to end after 50 or 100 years, 50, 80 or 100 years. Well, we're seeing multiple extensions come through now because there isn't an alternative source. On top of that, we're seeing the announcement restarts. So there was a number of reactors that were built back in the 70s and 80s that either started and were shut down or never even started. Now, instead of starting from scratch, a lot of those reactors are being looked at to bring back on. That's not in a lot of the models. That's not factored into the supply-demand equation, and that's coming down the pipe really quickly. And now layer on top of that new reactor builds, and that's really something that's just starting to happen, particularly here in the U.S. So we've got a big demand profile that's coming down the pipe, and really, so where's that uranium going to come from? Then, back to Janet's question, where has it been coming from? Well, almost all uranium that's consumed here in the U.S. at some point historically has touched, Eastern Europe or Russian soil, which is it's a crazy thought to think about. But really, we've lost that capacity domestically to convert and enrich uranium on a scale that can power our domestic reactor fleet. Even the uranium that we consume. Back in the 80s, we were pretty much self-sufficient from a uranium production perspective. We're consuming about 50 million pounds a year right now. In the 70s or into the early 80s, we were producing 45 million pounds domestically. We're incredibly well blessed here geologically with uranium mineralization. Now, it's not of the grades that you see elsewhere, in Canada or in Kazakhstan, but there's a lot of uranium here. It's just lower grade, ergo it needs a higher price. And so for that, when we had the Russia Ukraine war, you really disrupt those traditional supply lines for the nuclear fuel cycle. It made us look back internally and where else can we go? Well, guess what? There's nowhere else to go. We have to build it out. And really the pinch point initially was on the enrichment side, and that's where we've seen sort of the government-backed investments come first. Now we're seeing that come down the pipe towards conversion. And absolutely, as Bill just mentioned, in terms of government support for permits to get the mine production back up and running. Last year, we produced less than 2 million pounds a year domestically here in the U.S., down from 45 million. enCore is responsible for almost half of that. So it's really something where we really need to make a big effort here of ramping that production back up, and that's really what this group of companies up on the screen is all about. It's with enCore as the producing entity, and then just going down through advanced stage development in various jurisdictions, be it in New Mexico or Wyoming, and then grassroots exploration, like where are the next round of uranium deposits here in the U.S. going to come from to supply our domestic reactor fleet, and that's really what's Premier American Uranium and Urano are all about as well. So. Anyway, that's sort of a little bit of a take on maybe jumping the gun a little bit in terms of getting into the company specifically, but I thought it was just really important to provide that context just about how important the U.S. can be from domestic uranium production perspective on a global scale.
So, and thank you. And I know the world's largest consumer, 48 million pounds a year, 86 we were self-sufficient. enCore is now the largest producer of uranium through ISR. Bill, I think, can you just give a real quick overview of the in-situ recovery process?
Sure. First off, there's two essential kinds of uranium mining. When you say uranium mining, you think of underground adits, you think of waste piles, you think of tailings ponds, tailing piles, you think of open pits. 35% of the world's uranium comes out of these type of mines. 65% of it comes out of in-situ mining. In situ mining, there are no pits, there are no underground mines, there are no tailings piles or ponds, and that can be done of one of two ways, either by injecting acid into the substrata, which liberates the uranium and puts it into solution, just like sugar or salt in your water, or you can do it with oxygen. Oxygen does the same thing. Oxygen is obviously far more environmentally acceptable. Kazakhstan and Australia are exclusively, and I'm surprised Australia is, but exclusively acid. And Kazakhstan says they're quite environmentally concerned, but the concern doesn't translate into a whole lot of action. It's obviously cheaper to do it and more efficient to do it with acid. It's also a nightmare to ever reclaim it fully. Acid goes down and liberates half of the periodic table. It's very efficient. You get 97% recovery potentially with acid. You get about 6 or 7% less with oxygen. But with oxygen, we can walk away from it in 3 pore volumes of water, which basically takes about 2 to 3 years. We simply turn off the oxygen, run the field through reverse osmosis. The oxygen liberates about a half a dozen elements instead of half the periodic table. We're reducing the content of the uranium in the water, obviously, by removing 90% plus of the uranium. And, you know, a few other things that you liberate, molybdenum, vanadium, a little selenium, you know, and you get a lot of sulfate as well. So there are a few things to clear up, but you can imagine when we're done, you can just see a pastoral scene with the wellheads pulled, cows roaming around. And that's a big contrast in such a short period of time. And that translates into a much shorter permitting time because you don't have the opposition up front that you would have with a traditional mine. Now, if you're using acid, you'd probably get a bunch of opposition as well. But anyway, that's essentially the only way we do it. And just a very brief primer on ISR. You have to have certain requirements. Number one, it has to be a sandstone-hosted deposit. Has to be under the water table, about 80 feet under the water table at least. And each sand grain is actually coated much like an M&M candy shell with uranium around each grain. So when we typically pump water out of the formation, it's got a bit of uranium in it, we inject oxygen gas with it, dissolved oxygen. And the reason it has to be 80 feet under the water table is to keep the oxygen from gassing off. We need that hydrostatic pressure to keep it in there. The oxygen actually reduces, if there's any scientists in here, it reduces your valence state and makes it it reverses the redox reaction into a soluble form of uranium. Goes right into solution. We pump it to the surface. We run it through a specific ion resin, which is attracted to the uranium, or uranium is attracted to it. Once that's loaded to about 5% content of uranium, then we take it, strip it in the plant. We do use caustic chemicals in the plant, but here again, it's never exposed to the outside environment. Once that's done, we simply re-fortify the water that's circulating in the well field with more oxygen and continue and rinse and repeat until we've extracted all that we can. And it's by far, it's very similar to non-invasive surgery if you think about it. You know, what they can do now without ripping your knee or your shoulder open through scoping is remarkable. Same thing. We're much more akin to the oil and gas business than we are mining, even though it's referred to as uranium mining because it's a metallic commodity. So it's, and by the way, this was invented back in the 70s by oil companies. Most of the uranium that's been found in the last 5 decades has been found by oil companies. All the oil companies used to have a uranium division. And quite frankly, when they run their radiometric probe down the oil and gas well and they see a big gamma spike at the top, oh, wonder what that's all about. Turns out it's uranium. So they did find most of it, and especially in the bigger deposits that have been found in the last, like I say, 50 years. So just a little bit of background on what we do.
Yeah, thank you. I want to give each of you one more topic, and then I want to open the floor to some questions. So, Greg, could you give an overview of how the suite of companies works together, enCore as the lead with the producer, and how everything else fits?
Yeah, absolutely, and I think it's a really elegant sort of structure in terms of having the companies grouped under an umbrella, and able to leverage off of each other's specific talents and specialization. So as we mentioned, enCore is the producing company within the group. All production from 2 facilities in South Texas via in situ recovery, as Bill sort of walked through. But then I think a really important observation and action that enCore made was, let's focus in on what we're good at. We are good at developing and producing uranium, so let's stick to that. We've got a huge proprietary database, and we've got lots of earlier stage properties that are going to need a very specific skill set of geologists and explorationists to be able to go in there and identify where the next deposits are going to where the next deposits are going to be found, where we can go and develop them. So instead of having that internally and diluting our shareholders away from what they want, leverage towards, which is uranium production, let's put those earlier stage projects into other publicly listed companies. And that's really sort of, I think a relatively unique way of looking at things. Certain groups do it, like the Lundins, in terms of their family of companies, but within, sort of the enCore group, that really is what spawned a company called Nuclear Fuels, which I was the CEO of. And Bill came to me and said, listen, we're going to put this company together. It's going to have a lot of the earlier stage properties that enCore currently owns in Wyoming, as well as some other jurisdictions. We're going to focus on ISR exploration, and we need someone to run it. And that's where I jumped at the chance. It sort of fit my broader macro thesis with respect to uranium. It fit the domestic U.S. resurgence of domestic U.S. uranium support and production thesis. And really, from a geological perspective, Wyoming is one of the most well-endowed jurisdictions for uranium, with lots more to be found. Really, we didn't, in the 80s, we didn't stop uranium development because we ran out of deposits. It was really on the back of 3 Mile Island. Exploration stopped overall. So really, stuff was almost left mid-stride. So we were able to pick up on that, run with it at nuclear fields to the point where we were having some very good success, particularly at our Casey project in Wyoming. So much so that a larger company, Premier American Uranium, really liked what we were doing. They had a similar strategy in terms of focused on uranium exploration and development. They had a couple more advanced projects out in other states, but they came to us with an offer that really we needed to bring to shareholders. So we merged the two companies earlier this year. Now I sit on the board of Premier American Uranium. And I think that's a really good sort of example of value creation within the space of what enCore did. Now we're seeing that happen again in real time right now with Verdera Energy. enCore went and took their New Mexico assets. Again, New Mexico, massive historical producer of uranium. Obviously, timelines for permits are on a different sort of path than other jurisdictions, particularly the agreement states. So instead of keeping those locked up and not getting any shareholder value within enCore took them, put them into private company of Verdera, which, as Janet mentioned off the start, has just announced a go public transaction, looking to raise funds to advance the projects, as well as go public later this year or early in 2026. So it's an example of the next sort of evolution of the enCore group of companies with Verdera coming to market. And then finally, we've got Urano within the group as well. We've talked a lot about ISR. However, within the enCore database, there's many projects that are conventional style, those open pit and underground mines, that have potential to come back into production or new discoveries. That's within a company called Urano, which is publicly traded again. The commonality here is enCore is a meaningful shareholder of all of these entities, and there's a lot of cross-pollination from a shareholder perspective, but really it's able to leverage the big brother in enCore from a financial support perspective, but also have each company specialize in terms of the stage of company as well as the jurisdiction.
Thanks, Greg. Last topic, I'm going to pass on to Bill, and then we'll take some questions from the floor. I do want to say one thing about Verdera. In doing the spin-out, after Bill hit up Greg for nuclear fuels, he hit up me for Verdera. My background, I've worked with Aboriginal groups in Northern Canada for 30 years. Completed a number of benefits agreement. It became very important that we work on our social license in New Mexico. So we've been there for about 1.5 years, working with the community through the Clean Energy Association of New Mexico, which we established. Last one for Bill, because I think it's important, the role of data mining in putting the whole suite of companies together. I know the last database you acquired was the Getty Oil Mineral Database, but the importance of having private data for this renaissance in the U.S.
Well, and it really boils down to one simple thing. There's been almost a cessation, if not a major hiatus of exploration for uranium for the last 50 years. 3 Mile Island was 1979, so it hadn't been quite 50 years, but 47 years, 45 to 47 years. Virtually no exploration. Been a year or two here and there, but very sporadic and really not significant. Canada's carried on with it and has made some good discoveries. Takes forever and a day to permit in Canada. I've been there. It's not easy. So the value that lies in these filing cabinets and the old data, projects that were already proven up or on the cusp of being taken into feasibility studies, they're just sitting in a filing cabinet. And so you cut off years of exploration and tens of millions of dollars by having access to this data. So it's really important. With that, entertain any questions the audience have. We have about 4 or 5 minutes left. Sure.
Question on the 2 fields you have that are operational. Are they about the same size? How many injection wells do you have? And where does the water come from?
The water comes from the aquifer that hosts the uranium. And as such, it's an aquifer exclusion zone. It's not fit for humans or cattle or agricultural use. And so it's been off limits and it's been segregated that way. So that's where the water comes from. In terms of the size, we have 2 plants that are 800,000 pound a year nameplate capacity. One of those is idled in mothballs, if you will. Would require about $4 million to either consolidate it with its sister plant and increase the production there, or to tear it down and move it on. It probably will not operate again. It's called Kingsville, and that's because it's got an awful lot of nice houses nearby. So it would be a hotbed. Its twin plant, Rosita, is also 800,000 pounds. It's about 50 miles away. Both plants were built to double their capacity, so we're actually in the process of moving some of the equipment from Kingsville over to Rosita. The large plant is Alta Mesa. That's the one that's on the front piece of our cover and that you see here in the slide. And this is rated at 1.5 million pounds of primary capacity. That is full front end, back end, the entire process I explained, including drying. Has an additional 500,000 pounds of drying capacity, such that we could bring in satellite. Recall I'd mentioned that once the resin is impregnated, it's a slurry. We can bring that in on tanker trucks from as far away as 300, 400 miles away from remote locations without having to build a new plant. And so it has an additional 500,000 pounds. So altogether, we've got 3.6 million pounds of permitted capacity. Now at Alta Mesa, I will mention we have a 30% joint venture partner in Boss Energy out of Australia. They in essence, are an equity contributor. We do have a technical team, but obviously with 70%, we're the operators.
Is this a well-intensive project?
It is. We drill wells roughly every 100 feet. Our biggest single cost is well drilling. It's about 40 to 45% of our cost. And we have a fleet of 32 rigs turning at the moment on any given day. Typically, our well depths are 600 feet or less. You can do ISR under current economics down to about 1,000 feet. And then I say about because geologic conditions are different. But once you pass that, you have to use steel casing and your cost goes up dramatically.
And Bill, I think an important factor is how long it takes to install a well.
Yeah, we actually went through a management change back in March, and it was taking us roughly 7 days to get one new well on. We're now down to just over 1 day. Now, they come on in clumps of 20 and 30, so you have to calculate what your average is. But we're getting very efficient at it.
Other questions? Yes, sir.
Sure.
Two questions. Madera is New Mexico and Urano is Utah, my understanding.
Correct.
How do the regulatory processes in those two states compare to, say, Wyoming and Texas?
Well, Utah is an agreement state. It's very quick to operate. Utah is not known to have any ISR deposits. I believe personally that's due to a lack of exploration. There's certainly sandstone units that contain uranium that if you project them down dip, if the water table is within a reasonable distance, you'll have an ISR deposit. Simple fact of the matter is Utah was one of the first places they found uranium because it's outcropping. So a lot of the conventional mines were done there along with Colorado. So I think you'll see ISR develop there at some point. It's a good state to work in. They're very pro-business. New Mexico is the biggest issue there is the government and the indigenous situation. The early uranium was not kind to, in particular, the Navajo Nation. So a lot of community work has to be done and a lot of making up for past times got to be done there. But here again, several of the projects there have been put into Fast 41. And we're seeing remarkable progress made there. So I think you'll see it come along. And quite frankly, here again, New Mexico's got about half of the U.S.'s uranium. And if we're going to become self-sufficient, or if we're going to see AI go to its full potential, New Mexico has to become involved. It's simple math.
And I'd like to add one thing, that there is a series of companies that Bill mentioned that are going through Fast 41, so they're receiving federal attention to move the projects along at a more accelerated pace. The leader in New Mexico is Grants Energy. It's a Mount Taylor project. It's a 170 million pound resource. It's privately owned under General Atomics, a military contractor. And they have a uranium division. They have Heathgate in Australia, and they have Mount Taylor. And they're really out in front. So it's a very nice group that we're working with in New Mexico that has a real push to see this happen. And their timeline's about, publicly stated, about 5 years.
My next question is, will you have your ore processed at the White Mesa mill, or is it going to be shipped out?
No.
Is there any other alternative?
There is an alternative, and that is build your own mill. And in Utah, that's about a 3 to 4 year proposition. And the other one, of course, is with the ISR, you can haul your resin a great distance. It's a very high dollar commodity. Once it's on a rail or on truck, you can haul it a long ways. So we would use our own facilities. Where exactly at Verdera would build their facility, be it in New Mexico or perhaps out of New Mexico to gain some political favorability in terms of that, is yet to be decided, but we're scoping both alternatives out.
Any other, oh, sorry, Greg, go ahead.
And sorry, maybe just before we leave New Mexico, I do want to highlight that Premier American Uranium just came out with a preliminary economic assessment for our Sevieta project. It's a past-producing uranium open pit mine in New Mexico on private land. So from a permitting perspective, does provide some good advantages there. It's a really unique project. It's got great sensitivity to the uranium price as well as to inferred heap leach recoveries. We've got an NPV of around $85 million. That doubles if we increase the uranium price to $125 million, up to about $160 million NPV8. Now, the real leverage, though, is actually if we increase the recoveries. We see even more meaningful increases if we go from 80% recoveries to 90% recoveries. So there's a lot of torque there within the Sevieta project. So it's definitely something that, with the nuclear fuels transaction with Premier American Uranium, that I think it really benefits the combined shareholder base.
Is the New Mexico government hindrance to
Yes.
development on private ground? Or
Yes.
the state?
New Mexico does not like development.
Right.
I mean,
And that
just
is
in a
not
nutshell.
isolated to this sector, but
Yeah.
yes,
I mean-
they have some work to do.
But they are coming along. And part of this is the Fed has a lot of force over states that are largely subsidized by the federal government. So it'll get there. It will take longer, but it will get there. And one thing I would say in closing is, one of the reasons enCore maintains an significant equity position in all of these companies is because they are out developing new resources. We're the production guys, so we want to maintain a very healthy relationship to them so that, A, they don't have to go and find their own production people, which are the biggest shortage in the uranium industry by far, and that we'll be the logical partner of choice when it comes time to build those out. I want to thank everybody for coming and all the good questions. I wish we had time for more, but feel free to grab a card or something, and we always entertain questions off the session. Thank you.
And thank you all very much. We appreciate your time. It's valuable, so thank you.
Thanks, Greg.